Good morning again, everyone. I'm John. I think going from the list of attendees, I think some people are joining not for the first time. So welcome back to those of you who are joining for a consecutive time. And for those of you that are joining for the first time, thank you for coming along. Look, what we will do is from the last webinar, which happened at the start of July, there's only really been one big update to the laws. I wouldn't even call it an update. It was more of a clarification, but it does have some pretty significant flow-on effects for a particular group of companies. So I'll cover that update right at the start, so that if there are people here that are joining, that have joined the previous webinars, that update is the only part that is really new from the previous webinars. I'll cover that at the start. I'll let you know once we've covered that, and then if you want to stick around for the rest of the webinar, great. But if you were on the last one, then there won't be much more new information for you. Okay, we've just had we're still having, or people are still joining. So sorry to repeat myself for the third time, but for those of you joining just now, at the bottom of the screen, you'll see a Q&A box. If you click that, it'll bring up a window that you can type in a question. Please send through your questions throughout, and I'll answer them in the relevant section. Okay, so I'm just going to share my screen. Give me one moment, please. Okay, so what we'll go through today, we'll go through who and who is not included in corporate tax, in the corporate tax regime. We'll go through when it impacts people, and that is where we'll talk about the latest update that was released this month. We'll go through the compliance steps really that everyone needs to be aware of. And then obviously the big question, which is around, how much tax do I have to pay, if any? Hopefully, most of you on this call will end up in a position where you don't actually have to pay any corporate tax. But as we'll sort of establish, to actually get to that point, there are steps that you have to take. So the first thing is, who is included in corporate tax? So who does corporate tax apply to? It's a very easy rule. Every single company that is registered in the UAE falls under corporate tax. So it doesn't necessarily mean that you will be paying corporate tax, but you do fall into the corporate tax regime. So there's some questions here about an SPV registered in ADGM, RAC ICC companies. For the most of those cases, especially the SPV and ADGM, they will fall under corporate tax. I'll talk a little bit about offshore companies in a second. Branches of foreign companies, yes, generally you do need to register here. But the main rule here is that if you have a company, then it automatically will fall under corporate tax if it's registered here in the UAE. There are two sort of exceptions around this. So if you have a offshore company, so there's a question here around RAC ICC, that is considered a offshore jurisdiction, yes. However, you need to look at where that company is actually managed from, right? So the rules are a little bit complex, but it really boils down to that. And so if you have a RAC ICC company, but you are the manager, right? You run that company. The company might own property here in the UAE, onshore UAE. But the main thing is, if you manage that company and you live here in the UAE, then that really means that your company is deemed to be resident here in the UAE, and so you fall under corporate tax. Generally speaking, if the RAC ICC company only owns things like dividends or owns shareholding in another UAE company, it's not going to pay corporate tax, but you do have to go through the motions of compliance. So you still have to register, you'll still need to do proper accounting, and then you'll need to file a tax return, but we'll go through that in more detail. The other example here, or the other sort of different criteria is there's a rule around natural persons. So Neil, there's a question here from Neil around a freelancer license. So if you are a freelancer, right, there is no separate legal entity between you and the company. Okay, so you are the company yourself, right? In those situations, you only have to register for corporate tax if your revenue goes over 1 million dirhams. Okay, if you're under 1 million dirhams, they just treat it like you're an individual, you're not a company. It's only when your revenue hits that 1 million dirham limit that you need to register. But that is strictly for natural persons, so not a company. It's when you just have a freelancer license, trading as yourself, no separate legal entity. That's the only situation where that 1 million dirham threshold applies. Every other company should need to register. Neil, you might want to message me separately. So it sounds like you have a freelancer corporate tax number, which implies that your revenue is over 1 million, because that's the only way that would have been accepted. But a DED company, if that's a separate company, it's an LLC, for example, then that should be accepted by the tax authorities for registration, regardless of revenue. But if it is a DED freelancer license, then they will only accept your registration if you can show that your revenue is going to be over 1 million dirhams. I think that covers a couple of other questions here. Same applies for an e-trader license. So with an e-trader license, it's you individually as a person that is getting that license. It's not a separate company. And so that 1 million dirham threshold applies for revenue. And as soon as you go over that, if you go over that 1 million dirhams in a year, then you need to go and register for corporate tax. So just to clarify, in case, I don't want to lead anyone astray here, that 1 million dirham threshold is only relevant to really freelancers and e-traders, basically where there's no separate legal entity. Okay, I hope that's clarified. So, sorry, I'm just seeing some questions here, which sounds like a bit confusing. So, someone's asked here, regarding the freelancer category, as a person registered in the free zone, like Dubai Media City, but I'm working as an individual. So you need to ignore whether you are working as an individual or anything. That's irrelevant. What you need to look at is your license and the type of your license. If it is a free trade, if you are a freelancer license, right, that means you're a natural person. But so if you have a company in a free zone, you're not a freelancer, right? The company, as the individual, you are the owner of the company, right? And the company is what needs to register for corporate tax, regardless of revenue, regardless of which zone it's in, you have to go through the compliance steps. So I hope that's clear. What I want to make sure is no one has the impression that if you have a company, but it's only you in the company, that doesn't matter, right? It's the fact that it's a company means that you have to go through, you fall under corporate tax and you have to go through all the steps. It's only if you are an individual, a natural person operating under a specific license as yourself, that 1 million dirham threshold applies. Think of it this way, right? If you own a company, that company is a separate legal entity. An individual can't be owned by someone else, not in this day and age anyway. And so, if there's no owner of that entity, because you're an individual, right? You're just licensed as an individual, that's when the 1 million dirham threshold applies. Okay. So I'm going to go, this is where it's going to get a little bit complicated, right? Because for most people, tax began on the 1st of January 2024. Okay, that is the default financial year in the UAE is January to December, just the calendar year. For any company that opened before 1st of June 2023, okay? So if your company opened before 1st of June 2023, your first tax year started on the 1st January of 2024, okay? And well, the vast majority. So if you opened your company in 2020 or in, 2022 or in February 2023, your first tax year will start on the 1st of January 2024. So that's when tax comes into effect for you. There are some specific rules. One is around a company that is registered in DWTC. You follow a different financial year. If you're a DWTC company and you're not sure of your financial year, best to give us an email separately because that's a bit more complex. But for every other company, if you opened before 1st of June 2023, then your first tax year is started on 1st of January 2024. And so this, we're currently in your first tax year. Now, there was an update released earlier this month, which doesn't change anything. It's more of a clarification. It's something that we knew was in the law around the timing of the first tax year, but we weren't sure if it was actually going to be enforced. Now, what the Federal Tax Authority have now said is that these dates are absolutely going to be enforced, and they provided some clarity around it. So the one takeaway you need to have from the slide, if your company was formed in June last year, so not before June last year, not after June last year, it's only if you opened your company in June 2023, right? You have to file a tax return for the period of June to December 2023, all right? Again, this only applies to companies that were incorporated in June 2023. The way that the financial years work means that your first tax year went from June to December 2023. And what the tax authority has just said is that you have until the end of September to file your first tax return, okay? So again, if any of you on this call opened your company in June last year, just within that 1 month, right? It's a bit unlucky, but you fall into this weird bucket where you have a short first tax year and you have to file a tax return by the end of next month, okay? If you're unsure about that, or or if that applies to you, please send us a message separately, and we'll be happy to help you. So just to clarify, this is only that September 2024 filing deadline only applies to companies that opened their company in June 2023. Okay. The other two groups that I want to talk about. So if you remember, we've talked about if you opened your company before June 2023, right? That means that your first tax year started on 1st of January 2024. If you opened your company from the 1st of July 2023 until June this year, right? So anytime within that 12-month period, your first tax year runs to the end of this year. Okay, so runs to the end of December 2024. I know this all sounds a little bit nonsensical, right? Because someone who opens their company before June is taxable in 2024. Someone who opens their company after June is also taxable in 2024. But unfortunately, that is just how the financial years work, and the way that the legislation was written was that it left this one group in limbo. It's just the group that opened their company in June 2023, okay? So if you opened your company from July 2023 onwards, up until June 2024, your first tax year will finish in December 2024, which means your first return's due by September 2025. if you opened your company, if you've just opened your company last month or this month, you're in the second half of 2024, which means that your first tax year runs all the way through to December 2025. So, like I said, the vast majority of you, your first tax year will be ending in December 2024, right? There are a couple of smaller groups. If you opened your company in June 2023, then unfortunately you've got a very urgent deadline. If you opened your company in July onwards this year, then your first tax year will run until December 2025. I know that's all a bit confusing, but the important here is just identify when you incorporated your company or work it out, and then just work out which group applies to you. So I've just had a question here. What about companies before June 2023? So your first tax year runs January to December 2024. Okay, if you open before June 2023, then your tax year is 2024. You just need to be very careful if your company opened in June 2023. Just one thing to consider here is the other part that the FTA clarified with that release is that the thresholds for things like the small business relief rule don't get prorated. So let's say your first tax year, let's say you opened your company in September 2023, okay? That means that your first tax year runs from September 2023 all the way through to December 2024, okay? So you've got a 16-month tax period. Sorry, there's some more questions coming through. So if you open your company in September 2023, your first tax year is a long one. It runs all the way through to December 2024. So you've got a 16-month tax period, 16 and a half, 17. The small business relief rule, just using this as an example, the small business relief rule says that if your revenue is less than 3 million, you don't have to pay tax. Now, if you had a normal tax year, that 3 million would just apply for the revenue earned in the 12 months. However, for that long tax year, for your first tax year, they don't give you extra threshold for those extra few months. So you only get the 3 million, but it applies to the whole, 17 months, which is a bit unfortunate. Normally you'd expect that would be prorated, so you got some extra threshold allowance, but unfortunately they've said no, it's the same regardless of how long your tax year is, which does make sense because you don't want people modifying their tax years to take advantage of a exemption. Okay, I'm getting lots of specific questions here saying I opened my company in this month. If I open my company in this month, so just remember, okay, if you opened your company before June 2023, right, then you should have been then your tax year started 2024 calendar year is your first tax year, and your filing is due September 2025. Okay, so that's before, if you open before June. If you opened your company in June 2023, right, you fall into this weird bucket where your first tax year was June to December 2023, and you have to file a tax return by next month, okay? If you opened your company from July 2023 onwards, right, up until June 2024, that means that your first tax year runs from the date that you opened all the way through to December 2024. And then the last bucket is if you opened your company in July or August 2024, your first tax year will run all the way through to December 2025. So just, I'm just looking at this. So Ramsey, you're asking about July 2024, your first tax year runs to December 2025. If you open your company in May 2017, then your first tax year is calendar year 2024. Okay, I think I've answered all of those. If you're still unsure about it, again, please message us separately. We can pick it up offline. Okay. So now that we have established when your financial year is, right? and which company's tax applies to. Right? When we say that you fall under corporate tax or that corporate tax applies to you, there are 3 things that you absolutely have to do, right? So you have to register for corporate tax. Now, most of you should have registered already because, as you probably are aware, there were registration deadlines throughout the year so far. Big fines, 10,000 dirhams if you've missed your registration date. And most of those deadlines have already passed, obviously, because we're now in August. But there are a few remaining, through the rest of the year. So you have to register. You have to keep proper accounting records. Now, we say proper accounting records. I'll go through the accounting standards that need to be followed. But the main point here is you can't just be running you can't just be running it out of a bank account. You need to produce a proper profit and loss statement and a balance statement, a balance sheet. And then, of course, you'll have to file a tax return. Okay, regardless. Now, these requirements apply regardless of the size of your company, whether you're under a threshold, whether you have no activity whatsoever, you're still going to have expenses that you need to record. So the best way to look at this is, even if you are under the profit threshold, for example, you still need to prove that to the tax authorities. Okay, this isn't like a opt-in like VAT or anything. You need to show that you are registered for corporate tax. You need to submit a set of financial statements with your filing, because that set of financial statements proves how much tax you have to pay. Okay, so if you are if you're not going to be paying any tax because you're under the profit threshold, you need to submit a set of financial statements to prove that you're under the threshold. Okay. Just a quick thing on the registration deadlines. Now, hopefully you're all aware of these already. There's been a lot of publicity around these. Now, I just want to separate this from what we were talking about around the financial year. Okay, so the financial years or the tax periods that we were just talking about has absolutely no correlation to your registration deadline. Okay, so just think of them as 2 completely separate, unrelated deadlines. All right. The way to work out your registration deadline is you need to look at your trade license. You need to work out the month, look at that and see the month in which your original trade license was issued. So I'll just use an example of 2017, right? So someone said, my company is open in May 2017. So you go and check your license. If your license was issued in May 2017, right, then the month of issue was May. So if you look at this table, that means that your registration deadline is July 2024. So you should have already registered. If you haven't, then I'm sorry, you'll have that 10,000 dirham fine, which they're being very, very strict on. Same deal if you opened your company in May 2023, right? The year doesn't matter. It's just the month that is on your license dictates which month in 2024 you have to be registered by. Okay, let's use some other examples. Let's say you opened your company in August 2022, right? So you ignore the fact that it was 2022. You check your license for the month of issue. So if you got your license in August 2022, that means you have to register for corporate tax by October 2024. Okay. Remember, these deadlines, all of these deadlines apply regardless, and the compliance steps apply regardless of whether you have no activity, regardless of you only have let's say you only have the company for visa purposes, right? You still are a taxable business and you need to prove if that's not the case. So you still need to register, you still need to file a tax return, you still need to do accounting, all of that stuff. The same as we do all over the rest of the world for every single company, right? There's no difference here in the UAE. You are by default a company which should be paying tax, and you need to prove if that's not the case. Okay, so again, the ministry is being very, very strict on these fines. Please, if you are a June business, right? For example, I'm just using this as an example. Your deadline is this month, so you've got another couple of days to register. If you don't register, you'll get that 10,000 dirham fine. Now, you won't actually see that fine probably until September 2025, which is when your first tax return is due, right? But at that point, you'll get the 10,000 dirham fine plus the 20,000 for not keeping accounting records plus the 5 for not filing a tax return. So please don't just sit back and think that, someone's going to come and tell you what you need to do. The ministry just assumes that everyone is on top of this and they're coming down very hard with fines. Okay. I'll quickly talk about the accounting requirements. So, like I mentioned, you can't just use your bank statements and send those in for your tax return. The UAE is going to be the same. It's the same as everywhere else in the world. We are already filing around 20 to 30 tax returns a month for businesses which are closing down, which I'll get to separately. So we know that you have to provide a set of financial statements, regardless of whether you pay tax or not. Now, the statements should be up to IFRS, which is International Financial Reporting Standards. There are a couple of different standards depending on the size of the business, but the main point here is that you need to produce a profit and loss statement and a balance sheet. Okay, you can't just say, here are my bank statements. You can't just say, trust me, I'm under the threshold. You need to actually show that you have done accounting properly and that you are under, the threshold, or that you're under the small business relief rule. And they're very strict around this. Okay, so, which is understandable because the ministry and the FTA have given these tax-free thresholds, but in return, they expect that you do your accounting properly so that they can trust when you are saying that you're under one of those thresholds. If you are not doing proper accounting by now, you absolutely need to get onto it. Do not wait until 2025 and then go, okay, it's time to file my tax return. I better do my accounting for last year. For a couple of reasons. One is it becomes a lot harder, but two, you're going to be hard pressed to find people that will take you on. Right, and I can assure you that people will know that you are leaving it to the last minute. When I say people, I mean accounting firms, and you'll probably end up paying a lot more as a premium for doing it late. All right, so just get onto it now. It's going to be easier. You'll end up paying less. Obviously, Virtuzone, bit of a shameless plug, but we offer full bookkeeping services. We do it all online. We do it all up to standard, and we know that we're a very competitive price. So please reach out to us, or just go to taxready.ae if you need any help in your accounting or registration or filing, but we'll get to that later on. But the main thing is, please do not leave it until next year. It'll just get very, very messy. If you're lucky, all you'll do is you'll end up paying a bit more for accounting. If you're unlucky, you won't be able to find records. You won't be able to justify, your accounts. And you end up missing out on an exemption, or you end up paying more tax, or, it's just going to get ugly the longer you leave it. Okay. Very, very significant penalties here as well. So if you don't keep proper accounting records, right, and you can't provide them when asked, first thing that happens is you get hit with a 10,000 dirham fine for not keeping the records. You then get a chance to rectify that, right? But if you cannot rectify the accounting records and the FTA aren't happy, they give you a further 10,000 dirham fine, and then they'll start chasing you and getting you, until you can actually fix it. So again, please don't wait. There's no benefit in waiting until next year to do this. You just got to get onto it now. I still, it still blows my mind that people were holding off to register for corporate tax, thinking that something was going to change. And now they've got a 10,000 dirham fine. And if they'd just done it when, they were originally told to, this all could have all been avoided. So please don't wait. There is no benefit in waiting. The fines are already being incurred. This isn't going to be a case of, the government's going to waive the fines over Ramadan or anything like that, right? This is not traffic fines. These are, we're part of a global tax. part of a global tax environment now. Enforcement is very important, and these fines are going to be incurred and they're not going to get waived. So please do not wait to do these things. Okay. The big question. All right. Oh, sorry. Just one more thing on this. On accounting standards, you don't have to do an audit, right? And this is part of the reason why there are such big fines if you don't do your accounting properly. Is on the flip side, they're not requiring you to do an audit. You only have to do an audit under for tax under two circumstances. One is if your revenue is more than 50 million dirhams. Okay. If your revenue is over 50 million dirhams, that's 50 million, then you have to submit audited financial statements when you do your tax return. The other scenario where you have to do an audit is if you are trying to get the free zone tax exemption, which is quite a limited scope exemption, which we'll go through. If you're going for that exemption, then you also need to audit your accounts. But it's only under those two circumstances that you need to get your accounts audited for corporate tax. Most small businesses won't need to do it. Okay. All right, the big question, will I pay tax? So, a free zone company needs to fail around, well, let's say 4 criteria before it actually ends up paying tax. Okay. So I'll take you through the 4 sort of tests or the 4 criteria, and you need to fail all of them before you actually end up paying corporate tax. So if you are a free zone company, all right, the first thing you look at is the location of your clients. Okay. So call this the geography test. So if you are a free zone company and all of your clients are other UAE free zone companies, then you meet the criteria for the geography test. Okay. It has to be within UAE free zones and they have to be companies. Okay, so it has to be B2B. It doesn't count if your clients or if your customers are in the UAE mainland, and it doesn't count if your clients are outside the UAE. Okay, it has to be within the free zone bubble. If you meet that criteria, right, then you've met the first, or you've met a criteria under which you can look for an exemption. Okay. Again, it does, if you have clients in the free zone, but you also have clients outside the UAE, then unfortunately that means you failed that criteria. It's only very small chance that you would meet that criteria. So that's the geography test. Let's say that you are a free zone company, but all of your clients are outside the UAE. Okay, so that means you failed the geography test because they're not UAE free zone companies. So the next criteria we look at are the activities of the business. So the ministry really has said that if you are a free zone company and you do a qualifying activity, then you can qualify for the free zone exemption. Now, the list of qualifying activities is very narrow. It's very specific, and it very much functions or is very much focused around heavy industry and financial services. Okay, so it includes things like trading in aircraft and aircraft parts. It includes shipping. It includes insurance companies. It also includes a couple of trading companies, but trading activities, but I'll go to that separately. But generally speaking, it does not include any services. Okay, so let's say that you are a marketing consultancy company or an IT consultant company. Okay, and let's say that you have 2 clients, one in the USA and one in Europe. Okay, so because your clients are not in the UAE free zone, they are outside the UAE, you fail the geography test. because you are doing IT consultancy, right? Consultancy, it's a service, it's not considered a qualifying activity, so you fail that criteria as well. The next criteria you can look at is called the small business relief rule. And this rule is available to all companies, not just free zone companies. It's mainland and free zone companies, right? If your revenue, your annual revenue is less than 3 million dirhams, then you don't have to pay corporate tax, okay? You still need to prove that your revenue is under 3 million dirhams. So just to be clear, you still need to go through and you need to register. You need to do a set of accounts, which shows that your revenue is less than 3 million. And then you'll file a tax return, which says, please give me the small business relief. And the FTA will say, agreed, you don't have to pay any tax. Okay. Let's use that same example, but fail that criteria. So let's say you're the same, you're an IT consultancy, you only have clients outside the UAE, so you've failed the geography test. IT consultancy is not a qualifying activity, so you've failed that test. Let's say your revenue is 4 million dirhams, right? So you've failed the small business relief. That means that your company is a taxable company. All right, so they stop looking at your revenue and they start looking at your profit. All right. If your profit, let's say that your profit was, you had 4 million of revenue and then you take off your expenses. And so your profit is 1 million. All right. On that 1 million dirhams, your first 375,000 dirhams of profit is tax-free. All right. So if you only had 300,000 dirhams of profit, you wouldn't pay any tax. But if your profit is over 375, you pay 9% on any profit over 375. So using that example of 1 million, right? The 375, first 375 of that is tax-free. And then you pay 9% on the remaining 625,000 of profit. So you'd end up paying around 60,000 dirhams in profit. Sorry, and 60,000 dirhams in tax on 1 million dirhams of profit. Again, you only get to that position if you fail the geography test, if you fail the activities test, your revenue goes over 3 million dirhams, and your profit is more than 375,000. So I would say many companies will fall into one of these exemption buckets or relief buckets, especially on the small end of, on the small and medium end of companies. And that is deliberate from the FTA and the ministry. They don't want to hit the smaller companies with this tax regime. They want to be as friendly as possible to that segment of the market. And so all they ask is that you go through the compliance steps, you meet your registration deadline, you do your accounting properly, and you file a tax return just so they can be certain that you do qualify for that exemption. One thing here, there's a few questions coming in about SPVs and about investing in other companies. So I don't want to get too complex, but if all you do is invest in if all the company does is invest in other UAE companies, then you'll be exempt from corporate tax, right? From paying tax. Again, you still have to register and do all the steps. But if all that company if it's just a holding company with UAE shares, or holding UAE shares in UAE companies, it is exempt. You won't pay any corporate tax. If it holds shares in companies overseas, there's a couple of tests that you need to apply. And with the UAE holding, you also have to hold it for more than 12 months. But generally speaking, you won't pay any tax on that. Okay. Questions here. Tax-free threshold, does that apply for free zone companies? Yep, absolutely. So everything that I've got on the screen right now applies to free zone companies. I can see one now. There's a question here around small business relief. Yes, that is available to free zone companies as well. There was a bit of confusion because one of the legal releases said that small business relief isn't available for qualifying free zone companies, but that's sort of a moot point. Basically, a qualifying free zone company is a free zone company that's already qualified for the free zone exemption, so you don't need the small business relief. So it's a little bit confusing, but please, rest assured, small business relief is available for free zone companies, as well as a tax-free threshold. I'm getting some specific questions here around, specific products. Are they qualifying activity? Trading company taxation rules. I can't go into, obviously we can't go into really specific scenarios here for each company, but please, these are very, very valid questions. They're a bit technical. We do free consultations, right? So if you jump onto taxready.ae, you can book a free consultation, and we'll go through this, and we'll talk you, if you have specific questions, and we'll explain to you what needs to be done. And hopefully you'll do it with us. But we're happy to sort of help with that free consultation to start. Okay, sorry, and the same about the tests if an SPV holds shares in a foreign company. It gets a little bit complex. So please just jump onto taxready.ae, book a consultation, and we can go through that. We can't really go too specific on questions right now. Otherwise, we'll be here all day. Okay. Just one thing to note on the small business relief. It's actually only in place until the end of 2026, unfortunately. Then it's probably going to go away. But you will, so beyond that, you'll be a taxable business. But by then you should have in place measures to sort of minimize your tax liability, which we'll sort of get to. Okay, I just want to cover, sorry, I'm jumping around a little bit. I just want to cover a couple of things before I get into trading companies, because trading companies have a special sort of treatment around designated zones. So just before we get to that, just one thing I want everyone to be aware of is if you are closing your business, and there's been a lot of confusion around this, and this is another thing that was clarified in the latest update from the FTA. If you are closing your business and you have already entered your first tax year, so for most people, again, let's assume that your tax year started on the 1st of January. If you close your business in 2024, you still have to meet your registration deadline, okay, regardless of when you close your business. Then you have to file a tax return for the period of the 1st of January up until the date you close your business. And then you have to deregister your company for corporate tax, and all within 30 days of cancelling your license, basically. So we're getting a lot of people getting hit with multiple fines where they are just closing their business. Some people are closing their business in 2024 because they're saying, oh, look, I don't want to do it because, I can't be bothered. Tax came in already, right? And so you need to go through these steps if you close your business. Hopefully none of you on here are having to close your business, but just make sure other people are aware of that. If you hear of anyone closing their business, again, the fines stack up really quickly. So you get it's a 10,000 dirham fine for missing your registration date, and then 10,000 dirhams for missing your deregistration date, and then you get additional fines for being late with your corporate tax, so tax filing. So we're getting people that are coming to us having closed their business in January, for example, and all of a sudden they've just received a 25,000 dirham fine and they don't know what it's about, and this is why. All right, so it's the same way it works anywhere else in the world. Everywhere else in the world, when you shut down a company, the hardest part of shutting down a company is getting your tax clearance. The UAE is exactly the same now. Okay, so we'll just get into some technical stuff now. So the link here, taxready.ae. If you want to book a free consultation, please go to there's a QR code on the screen right now. We'll come back to this at the end, but I just want to put it up there for now, just so you can get on and book it if you'd like to. before we get into something technical around trading companies, because I know that when things get technical and it doesn't apply to you, people will sort of tune out. So jump on there if you have further questions around anything at all. Again, it's totally free, that consultation. You know, we'll explain to you what needs to be done to comply. And like I said, hopefully you trust us to do it for you. We've got very, very good pricing, so I'm sure you would. Okay, a couple of technical things. So one thing I just want to cover is a common question is, if I am a company, right, and let's say you're a taxable company, so your revenue is over 3 million, right? You're trying to minimize your profit. One of the biggest questions I get is, well, can't I just, you know, I'm the owner of the company, but can't I just pay myself a big salary to minimize my profit? So the answer is yes, you can pay yourself a salary under certain circumstances. But the second part is no, you can't just make that salary, you know, outrageously large so that you wipe out all your profit. So there are two parts to that. So the first thing you need to do, right, is make sure that from a visa and compliance standpoint and a contract standpoint, you are entitled to withdraw a salary from your company. So that means you can't be on the investor visa, for example, because if you are the investor, you can't be an employee of the company, right? So you need to be, and it's quite easy. You just change your visa from investor to executive director, for example. So you become an employee of the company from a visa perspective. If you're on a golden visa, that's fine, right? But you just can't be the investor visa on that company. So you need to have the right visa. You need to have an employment contract with the company, and that should be registered, you know, either with the free zone or with the ministry if you're on the mainland, right? And then if you are in certain free zones, so DMCC or on the mainland, you need to also be processing the salary through WPS. Okay, so those are sort of the compliance steps. On the amount, the overarching rule is that the amount needs to be arm's length or market value. Okay, so if you are the owner of a company, you are a connected person, right? Connected person is a term in the tax legislation, and any transaction with a connected person needs to reflect market value. So what does that actually mean? So let's say I have a management consultancy, right? And there's two of us in the business, two partners. Our revenue is 4 million dirhams, right? We can't just go and take out 2 million dirhams each to minimize, you know, to bring our profit back to zero. What you would need to do is you would need to assess, you know, what sort of industry you are consulting in, what a partner in a firm might be earning in that level or at that level in that industry in consulting, right? And then say, all right, if I went and worked for an independent firm that I didn't own, what would I be earning in this role? And that should serve as the benchmark for how much you can pull out as a salary. Okay, generally speaking, we think that around 1 million dirhams will be okay because that is the freelancer license. Sorry, that is the freelancer threshold, right? So 1 million dirhams a year, you're probably not going to raise any questions. Unless, of course, the revenue of the company is, let's say, 500,000 dirhams, right? Then, you know, you can't go withdrawing 1 million dirhams to put yourself into loss. But using that example, you know, if you've got 4 million dirhams of revenue, so you're a taxable business, you want to be minimizing your profit, you can't just go and pull out the whole revenue base as profit, sorry, as salary, right? It needs to be reasonable given the activities of the business, the industry of the business, and the turnover of the business. Okay. I'm just getting some questions here just on that closure thing. So we'll just quickly jump back to that and then go into the technical stuff on trading companies to finish. So if you haven't renewed your license, generally you can still register for corporate tax up to 3 months after your license expires, and they'll accept it. They'll accept the registration. We've found that if it's more than 3 months, you have to actually renew the license, register for corporate tax, and then deregister. It's a real pain. So please don't wait. if your license has expired and you're sort of deciding whether or not to go ahead with the business, continue with the business, you're going to have to register for corporate tax anyway, even if you close it. So just go and register now. Another similar question. If someone closed the company and did not register for corporate tax, do you get the fine? And is it possible to register for corporate tax if the company is closed? So yes, absolutely, you get the fine. So if you close the company, sorry, just to start with this. If you close the company after the 1st of January, right, then you've already fallen into the tax regime. So all of the rules apply. So even if you closed your company on the 2nd of January, right, your registration deadline still applies. You still need to go and register. You still need to file a tax return, even if it's just for a period of 1 day, and then you need to deregister for corporate tax. You can register if the company is closed, if the company closed during its first tax year, right? But the main thing here is that the fines absolutely apply, okay? So you can't just close your company and then go, great, I'm done with it. It's actually worse than that. If you close your company, a second timer starts for deadlines for deregistration, and if you miss that deadline, you get additional fines. So if you close a company, not only does the registration deadline apply, but the deregistration and filing deadlines apply as well. So it's really, really, it's very strict. It's very regulated around closing a company. Again, that's the same as we face in the rest of the world. Okay, let's jump into trading activities. All right, so I mentioned, I'll just quickly show you the list of qualifying activities. Now, as I mentioned before, it's very much around heavy industry, it's manufacturing. There's some commodities trading in there, treasury, aircraft, that kind of stuff. But the one I want to talk about, which seems to be, which we know is very relevant for smaller companies, or the small company segment, is around distribution of goods or materials in or from a designated zone. So third from the bottom. So what this means, right? Don't bother reading the whole thing. I'll summarize it for you. It means if you are a trading company, right, and you are registered in a designated zone, which is a special type of free zone. Designated zones are like a subset of free zones. If you're a trading company in a designated zone, then there is a way that you can be exempt from corporate tax under the qualifying activities rules. So I'll just explain a few scenarios that this applies, all right, or the few criteria that you need to satisfy. So first of all, you have to be in a designated zone, okay? A designated zone generally are those zones that are at the ports. So for example, JAFZA is a Jebel Ali Free Zone Authority, is a designated zone. Dubai Airport is a designated zone. There are a couple, Ras Al Khaimah has a section of its zone which is designated. Generally speaking, they are zones in which, goods which are in a designated zone are not deemed to have entered the UAE. All right, that's kind of the rule around it. But there is a list of designated zones. They're sort of customs bonded zones. But a lot of them now, off the back of these rules, a lot of them now do actually have office space as well. Okay. So you need to be registered in a designated zone. That's criteria number one. Criteria number two is that the goods that you are trading, right, the item that you are trading needs to be tangible goods. So you can't be in a designated zone and trading things like software licenses, right? Because that is not a tangible good, right? It needs to be actual physical goods that are, that are being traded. The third criteria is you have to take title to the goods, all right? So you can't just be acting as a broker or an agent. You need to actually purchase the goods from the supplier and then sell the goods to the customer. Criteria 4 is around the customer, okay? The customer has to be a further distributor, all right? So it can't be the end user. So it needs to be B2B, business to business. It can't be business to customer. It can't be end user. So you can't be trading on Amazon and selling to individuals. You need to be selling to retailers or distributors. All right. If you meet all those criteria, so you're a designated zone company, you're buying and selling goods, right? And you're selling to a retailer or further distributor, you can get the exemption from corporate tax under a few criteria. One criteria, well, generally speaking, with the latest release, it sounds like under all criteria, right? Which I'll go through all scenarios. So if you're buying from country A, let's say you're buying from China and selling to country B. So you say you're buying from China and selling to Turkey. The goods don't have to come through the UAE. You can just go straight from country A to country B. As long as you take title to those goods, you own the goods and then sell them on, that meets the criteria for the exemption. Okay. The latest release actually goes further, okay, and makes it more, I'd say, generous or more widens the rules a lot. So you can be a designated zone company. You can purchase the goods, right? You can have the goods pass through the designated zone and then sell them to a UAE distributor. So you can be importing and selling those goods to a UAE company and you're still exempt. All right. And the other way, you can be buying goods from a UAE company and either selling them directly to a client outside the UAE or passing them through the designated zone and exporting them, right? And that's still fine, all right? That's still okay. The last criteria, which I thought was very, very generous, is that if you are a designated zone company, you can actually be buying and selling inside the UAE, so between two UAE companies, and still qualify for the exemption. All right. So if you're a designated zone company, you can buy goods from company A in the UAE and sell those goods to company B in the UAE. The goods can go directly from company A across the road, across Sheikh Zayed Road to company B, right? But as long as you, as the designated zone company, were the one who purchased those goods off company A and sold the goods to company B, that still qualifies under the exemption. So you can effectively be trading inside the UAE, right? And as long as you're buying and selling the goods yourself, and the purchaser is a retailer or distributor, not the end client, then you still qualify for this exemption. All right, but you have to be a designated zone company. I think this is a really, good, lenient rule. It really opens up exemptions for all kinds of trading companies, B2B trading companies here in the UAE. If you are currently not in a designated zone, but you think this could apply to you, there are some complexities around it because you're already, in a tax year with your existing company, but please go ahead and book a consultation because there are actually ways that you can move. I wouldn't say move your company to a designated zone. That doesn't really apply anymore, but ways that you can kind of take advantage of this with a designated zone setup. And just one last thing, I think we're just going over time. Sorry, there were some questions here around oil trading. I'm just going to put this QR code because we're at time. I'm just going to put this QR code up. If you have any, please jump onto there and book a consultation. Have any questions around that? There's some questions around oil trading. I do have a point around qualifying commodities. So if you have time, if you're trading gold, if you're buying and selling gold or oil or any other commodities, just stay on the call for another 5 minutes if you have it. But for the rest of you, please scan that QR code, book a consultation. We can answer all your questions and tell you what you need to do. All right, where was that question? So Nikita, sorry, I wasn't ignoring your questions, but I just was hoping that we'd have time to get to it. Okay, so let's talk about commodities for a second. So one of the qualifying activities is called qualifying commodities. Now, this is another one that we got a bit of leniency on when they when they sort of clarified the rules. So originally it was indicated that you had to be trading commodities like oil or gold or grain. You would only, originally it sounded like you would only get that exemption if you were trading that commodity on a recognized exchange, right? So the European Energy Exchange or something like that. What they have since decided is that you don't have to actually be buying and selling the commodity through that exchange, but the commodity that you're buying and selling has to be of the same standard that changes hand, that is exchanged on the exchange. So the example they give is gold needs to be 99.4% pure because that is the standard of gold that gets traded on the recognized exchanges, right? But if you are buying gold of that standard from a supplier and selling it to someone else, right? As long as the gold can be verified that it was of that standard, then you get the exemption. It doesn't have to go through the actual exchange, which is a really big shift from what it was originally going to sound like, what the original rules were saying, and really opens up this exemption to, a much wider population. So Nikita, it really depends on, the exact sort of standard of oil or gas or anything that you are trading. But yes, there is a way for that to be exempt. Again, depends on what the real specifics around what that commodity is or what format the good is. Commodities does not include crypto. Sorry, Martin. Crypto is a bit of a weird one. There are questions around valuation, for example, like how do you put a dirham value on a cryptocurrency at a balance date? It's a bit up in the air. But yeah. Okay. Well, a lot of you stayed on for that last bit on commodities. So thanks for that. Okay, what I'll do, I'll just pop up the QR code in case you missed it. I think we will finish there. We only went 5 minutes over. So thanks everyone for joining. Sorry I dragged out a little bit. There was a lot of information there in the end. Thank you for your questions. Like I say, I like to answer them as we go because it keeps it pretty relevant, I think. We'll hold another webinar probably next month or maybe the month after. Again, the way I try and do this is, I'll try and cover any developments at the start so that people that are joining consecutively don't need to stick around for the same stuff. But yeah, again, any questions, jump on the, jump on taxready.ae or if you've scanned the QR code, we'll have that free consultation and we'll help you from there. Otherwise, see you at the next one. So thanks again.